Nvidia shares rising after a big quarter for the chip maker, revenue and earnings per share. An incredible $6.7 billion in net income, a 422% increase over the same time last year. Joining us now to talk about the results, Vivek, Arya, Bank of America Securities Senior Semiconductor Analyst. I was racking my brain, Vivek, to think of a historical analog to this, and I can't really come up with one. It's almost like this is truly a quantum leap, or a I don't know, something happened, something changed to get a 442% increase, and I've never seen the adoption like this. I know that they say that big advances, that the time between them is narrowing. It's like time dilation or something. That's one of Kurzweil's basic tenets. But are you surprised at this?
Good morning, Joe. Good to see you. I would say that, we are at the start of the transformation of the computing industry for the second time. If you remember a few decades ago, we saw the transformation of the data center from mainframes to x86-based server computers. Now, the problem is that we have had such growth of data, and now we are at the front of this large new workload called generative AI using large language models, that those traditional servers with those traditional x86 CPUs just do not scale. There has to be a rethinking, reimagination of almost $1 trillion of data center infrastructure out there. And we think Nvidia is at the forefront, right, and very unique in the combination of silicon, software, systems expertise, a range of partners, and we think it's in very early stages of going through that transformation. We describe it as AI, but AI is just one of those applications that will run on this accelerated infrastructure. So we think we are in early stages. Number one, it's almost $1 trillion of infrastructure that needs to be converted. Number two, and the third very important thing that I think sometimes get lost is the amount of leverage that the company has. Their sales grew over 100%. Operating expenses only grew 5%. And the reason is that they have been at this for the last decade, which makes it very hard for a new competitor to just come and beat them, right, by launching just another chip. This is not just a chip game. You have to bring together all those components of silicon, software, systems, scale, and we think NVIDIA is very uniquely positioned, which is why, despite the run the stock has had, it is actually cheaper today on a forward basis than it was yesterday, and it was at the start of the year, and it is cheaper than its 5-year forward median multiple. So we think that this thing can continue. The growth momentum can continue because we are still in early stages of this conversion.
That was like a symphony, listening to you. There was really we're really seeing a complete mass migration to a new type of server from the x86, which transformed the entire world when that happened. So can you think of a company similar in the past? Was Google's algorithms, would you say that's similar to something where you have a 10-year head start, you've got almost a natural moat just because the technology itself is so complex and takes so much time to develop? I mean, when do you see a viable competitor being able to emerge, and what would that take?
Sure. It's interesting that the last time we saw this transformation, we saw the move from IBM to Intel. And Intel ruled for a number of decades, and it was very hard to displace them. Because in the semiconductor industry, scale matters, incumbency matters, because you're not just creating products on a 6-month cadence. For all the products that NVIDIA is launching and coming out with this year, the design of these products started 2 or 3 years ago. The software frameworks that are underlying these products started 5 or 10 years ago. So that's why you don't just wake up and launch another product to compete with the leader. So I think we saw Intel have this dominance for a number of decades. And now I think it's NVIDIA's turn. NVIDIA is basically, where Intel was several decades ago in this, transformation. Where I think the technology will go from here to some extent is the ability for the cloud players to monetize this new computing paradigm, because their spending is not growing as much, right? There is pressure on top line. So they have to find new and innovative ways to monetize this technology, go from advertising-based models to more subscription-based models. So those things will unfold over the next few years. But what is clear is that they have to outfit their data centers with this new computing technology.
I don't know if we can show literally like a 30-year stock chart of Cisco, but that company tripled its revenue from 1997 to 2000, from $6.5 billion to $19 billion, similar scope of what we're talking about here. The stock went up 10x, then revenue flatlined 2000 to 2003, and Cisco lost 70% of its value thereafter. We need to go back even further on that chart if we can. I don't know if we can show what was going on in the late 90s. I think that's as much as we can show. But so and I saw Dan Ives over at Wedbush making the comparison. There you can kind of see that it coming back down in the early 2000s. So when Ives is saying this is the 1995 moment, well, we all know the dotcom frenzy had two sides to the story. So it's already a $1.2 trillion market cap. There's the spike you can see in Cisco in the very late 90s as its revenue exploded. And what happens to investors who, while you're absolutely right about the fundamentals for Nvidia, they don't want to get in another Cisco situation where they buy the stock at the peak of the excitement about the growth story.
Right. No, Kelly, it's a fair point. It's interesting, during those times, actually, I was working in the telecom industry, so I actually lived this firsthand. Now, what is different this time, and I know it's always risky to say it's different this time, is that a lot of the spenders at that time were the competitive local exchange carriers, but a lot of business plans, which in hindsight were not really fully baked. Look at who's driving the spending now. It's really strong, major US cloud players, right? Very well funded, multiple sources of CapEx to drive this, number one. And number two, it's enterprise. Enterprises have a lot of data that is just sitting there, right, with no ways of getting insight. So again, we call it AI, but what is AI at its heart? It's driving insight from a lot of data. So I think that is what is the big difference between what happened right back in the dot-com bubble, that the people driving the spending were very kind of, half-baked business plans, and the thinking was just build it and they will come. I think where we are today is there's a lot of money being spent by people who are a lot more thoughtful, who have a big base of revenues to draw from to drive this computing infrastructure. So I do think there are differences. And number two, what we have seen consistently is that in the technology industry, invariably the value shifts from the system makers towards silicon and software, right? And that is why we think that companies that are working at the semiconductor level have historically tended to have very extended ways of protecting their competitive moat.